Good morning, everybody. Welcome on board. It is Karthik with MoneyVest. Thank you so much for joining for our Market Open live stream here. Happy Friday to everyone as we are ready to close yet another really strong week of gains in the market here as the S&P 500, NASDAQ, and the Dow Jones, all three indices hitting a brand new all-time high yesterday. It is not very often that you actually see all three indices sitting at an all-time high all at the same time on the same day. So if the audio and the video is good, just give me a thumbs up. Just want to make sure there are no thumping sounds, there are no problems or technical difficulties with audio or videos. Just give me a thumbs up in the chat and then we should be all set and all ready to go here. Good morning, everybody. So thank you so much for joining. What to buy today for a day gain? We're going to analyze a lot of different stocks. And as I've mentioned before, the whole idea for these live streams is my time that I'm giving to you to ask questions and we can analyze some ideas and some trades together. And I also did a very, very interesting poll yesterday asking everybody if they would be more interested in swing trading opportunities as well, because I think we've got a very good handle on long-term investing, picking out the right companies, the right stocks that have tremendous potential for 5 years, 7 years out. And then we also are very active with options trading. But one area which I feel has a lot of potential, and we do take these swing trades every so often, but it is going to be a little bit more active participation for swing trading as well. And a whopping 215, almost 230 people said yes, we would be very interested in more swing trading opportunities and more ideas that we can take trades on. And then again, I had a very interesting meeting with a few of our other members yesterday that we are building a very nice custom swing trading indicator that we are going to include on our platform, as well as make it available for a lot of members as well. So that I think is going to be a game changer for everyone. I think it's incredible to be able to do that. But again, it's all going to come from proper risk management and proper precise understanding of technical analysis, as well as momentum and price action as well, right? So we're not just throwing darts blindly, but rather understanding how it all works together, taking into account price action, momentum, technical support, resistance levels, volume, which is a very, very important factor. Volume gives you confirmation. Without volume, you don't have any confirmation, right? So that, again, ties really well into swing trading. So good morning, everyone. Again, thank you so much for joining. Amazon looks juicy right now. We'll take a look at that. BMNR looks ready to launch. We'll take a look at that as well. There are probably more swingers in this group than you think. I agree. I think there's a lot of swingers, David, bunch of swingers. There's a lot of people that are just going to be eating that up. And look, yesterday's meeting was actually quite interesting, and the indicator seems to be working very well. Similar to the MoneyVest index, is what we have built for long-term investing, and it kind of shows you exactly where the risk reward is incredible. It's very, very precise to a point where the risk reward is incredible. You want to be dollar cost averaging, you want to be very, very aggressive at those times, and you want to sort of be more defensive, and you want to take some off the table when we are in greed or when we are in euphoria. Similar to that, this is another indicator for swing trading. And the best part is that actually is not for the entire market. It actually works for all stocks. Doesn't matter what stock you load up, it's going to show you exactly those precise entries and exits. So yeah, again, thank you so much for joining, everyone. Really, really appreciate you all. Short selling ideas also, please. Now, Frankie, the thing with short selling is that your losses are essentially uncapped, right? That's undefined. You can pretty much lose everything. So short selling is a lot more risky. It needs a whole different level of risk management as opposed to like swing trading or even options trading where your risk is quite defined. And so that's why I don't encourage, short selling unless, of course, you know exactly what you're doing, because you're also paying margin, you're also paying interest on the shares that you borrow. And some shares which are hard to borrow can run you up on fees, can run you up on interest, and on top of that, if you actually end up losing, then that is a whole different mountain of losses. So it is a very, very high risk, high potential reward, arena. And that's something that, obviously it's not for the average investor. It's not for, even the more sophisticated traders need to think twice, three times before actually short selling, because as you know, I mean, Tesla short sellers have lost billions. Citadel and all these companies have tried shorting Tesla and they have lost tons of money doing that, just because of how volatile these companies can be. And if once they start to become very parabolic, then it becomes a huge problem. Okay, Trump and Xi Jinping are going to be on a call. Swing trading, love it. Good morning. On the markets long about 90% of the time, so 72% of the times is the actual statistic, is the actual number for the markets actually going up. So this is based off of last 200 years worth of data, where 72% of the last 200 years the markets have been green, and then the rest 28% or so the markets have had a red year. So that obviously tells you that it pays to be bullish, it pays to be optimistic, it pays to be long, and it's, one of those things where to give you an analogy, it's very simple. If you and I walk into a casino and we're playing the roulette and I tell you that there's a 72% chance you're going to win betting black, are you going to bet red? Of course not. You're not going to put your money on red. You're going to put your money on black, because black has a probability of winning 72% of the times. Now, just because we've seen 3 reds in a row still doesn't give you any probability to keep betting on red, because again, the probabilities are not in your favor. And it's all about playing the odds. It's about playing the odds that are in your favor, so that you can actually benefit from that. Beauty of NZ, man, I have a request. Why don't you have a cheaper subscription for other countries like myself in India? 20 to 25 per month USD is too high for me as a beginner and want to join. I totally understand that. I do feel the value is significant. And in the grand scheme of things, when you take a look at what the markets can actually generate, and just the power of the community and power of our platform, as well as what we're able to offer in terms of the education and the alerts, enough is going to be, I feel like, it's tremendous. It's, in my personal opinion, I think there is, a lot more in terms of the value versus the price scale. But I totally understand that. And as Mike said, feel free to schedule a call with me. I'm more than happy to kind of walk you through the entire process and what we have to offer, the Discord community, the MoneyVest platform, educational material on Patreon, everything. I'm more than happy to go over. And look, there's over 200 plus tutorials and videos, that I've literally created in the last 4 years on fundamental analysis, how to evaluate companies, how to do technical analysis, different trading strategies, options trading, how to actually sell options, and the most important thing, psychology of investing, right? Because at the end of the day, money has very, very much driven by psychology and how our emotions are. And mastering your emotions, mastering your mind, mastering your psychology is very important to your long-term success. So all of those are there, and you're getting all of that for like freaking $20 a month. So it is actually, in my opinion, pretty crazy. But yes, feel free to schedule a call if you want. Email me at admin@moneyvest.com, and I'm more than happy to kind of walk you around the entire thing, and then let you make your own decision. Obviously, I'm more than happy to email me. And if you are really in a challenging environment where you are a student or you don't have the finances to join, I have given free trials to people where on a case-by-case basis, if you are like just getting started and you really want to learn, my job really is to help people. So I'm more than happy to give you a free trial if that's your situation, right? So again, I've done that for many people that I've actually spoken with, and they were like, I can't afford this right now, but I really want to learn. I want to change my life around, want to start investing. Hey, free subscription for a month, 2 months, no questions asked. And that's the whole idea, is like, I want to be able to do that because the more you are successful, the more our community is going to be successful. The more you win, the more we all win together. So again, it's on a case-by-case basis. If that's your situation, more than happy to just give you a free trial. Okay, so now let's come over to some individual stocks. Throw them out. Okay, any stocks, any companies you want, and I can take a look at them. I have a huge portfolio, and I have all my holdings in Magnificent Seven and SoFi and Palantir. I make huge money short selling. So, okay, I mean, if that's the case, then man, that's congratulations. It's incredible. You're doing great. Keep doing what you're doing, obviously, and show us the way. Show us the way. That's what we're here for. We're here to learn from each other, right? So I don't have all the answers, and neither does anybody. So we're here to obviously learn from each other. Okay, let's do this. Talk about Oscar. We'll take a look at Rubrik as well. Let's come over to Oscar first. So this is Oscar Health, 7.5% higher yesterday after the share dilution news came out. Obviously, a lot of us took trades on Oscar. We sold puts at $17. They were up, 90%, 95%. I closed them out yesterday. Didn't want to wait until today because I got my price. I had put a limit buy to close order at 5 cents and it got filled later in the day as Oscar was pushing higher. And then I think I added more shares yesterday. I think I had about 100 shares that I picked up. And my target right now is going to be closer to $21, $22. By the way, I shared all my mid to short-term targets on all of these companies. And $21, $22 is the resistance and the target on Oscar. Now, one more thing I want to mention, and I want your participation on this as well. For every trade that you take, there is something called the risk-reward ratio, right? We look at the risk-reward ratio for every setup, right? What's the percentage loss versus what's the potential profit? Now, if the price changes, would the risk-reward be the same or also change? What is the correct answer? What do you think? So I really want everyone to participate, and I really want you to start thinking in mathematical terms, in terms of like risk-reward. And if we set up an idea with a risk reward of, for example, 1 to 3, right? You're risking 1% to make 3%, or you're risking 10% to make 30, whatever. Now, as the price moves, is the risk reward the same or it changes as the price moves? So I really want to know from all of you. I really want a lot of participation. What do you think? Is the risk reward stagnant or would it change with the price? Okay, so we got a couple answers. Risk reward will change. It changes. Average cost is everything. Robinson says it changes. Correct. So it does change, right? So it changes because if you're doing your analysis and you've got a specific price target and you've got a specific stop loss, and if the price moves, so will your risk reward. And so if the move has already happened or a partial move has already happened, it's no longer the same trade that someone else took at the appropriate risk reward. For you, it's going to be different, right? Why? Because the price has already moved. So I get a lot of questions, for a lot of these setups or ideas. Hey, the stock's already moved 10%. Is it still a buy? Well, it's going to be evaluated as a brand new idea. It's going to be evaluated as a brand new setup because the risk reward has changed. Now, your 10% stop loss is going to be more like 20%, and your profit potential instead of 30 is going to be 20, right? So you're now looking at a 1-to-1 trade and not a 1-to-3, which was significantly better before the 10% move. So hope that makes sense because, we have to look in those terms always from a risk reward perspective because it's going to be different for everyone, right? So your entry, if it's different from someone else, is operating on a different risk reward versus what you are. So always keep that in mind. Now, Oscar, we've got a target up to $21, $22. It's starting to already reverse back up very nicely. And it also had a very nice higher low right about there. It kind of tagged that 1677 level, which is one of the reasons why $17 was a nice strike price to sell puts on. It got in the money very briefly, I think on Wednesday, rotate back higher. Right now it's back over $19. And so, like I said, my next target is going to be $21 at $22. Okay, coming over to some other names here. So Lulu, we're going to take a look at, as well as DPSD. So let's take a look at this Banks bullish ETF. Any kind of leveraged ETFs, as I've already mentioned, are tradable products. They're not investable products. Again, the issuers don't want you to know that, but it is really important for you to understand that these are only meant for trading, right? Because they rebalance every single day. They're not meant to track the yearly, multi-year performance of the underlying index because that's never going to match 3 times. In fact, if that underlying index or ETF has gone through a significant drawdown, you're going to be worse off than had you just put your money into that underlying ETF because this can actually move significantly more, right? 3 times more. And on the downside, it can really crush you. So this one right now is on a very nice uptrend, higher highs and higher lows a little bit. And so if you are planning on trading this or if you're already in this, I would keep a close eye at this 116, 117 level, all the way up to as much as 133, 134. Now, another thing I want to mention is do leveraged ETFs actually have any kind of support resistance levels of their own? That's the question. It's a very simple question. Yes or no. Do leveraged ETFs like DPSD or SOXL or TQQQ, all the different leveraged ETFs that we look at, do they have support and resistance levels of their own? Yes or no? Do they have any support resistance levels of their own? Yes or no? Let me see. Let me see how many people can actually answer this. Okay. Maddie says yes. Moritz says yes. One no. Shrikant says no. Quintu says yes. Rini no. So you see how there's like a little bit of this 50-50 right now. Some people think it's yes. Some people think it's no. Very simple question. I'm going to repeat it one more time. Do leveraged ETFs have a support resistance of their own? Yes and no, as Templehoff says. So, again, the correct answer really is no, because they don't operate on regular price action in terms of demand and supply. Simply put, if all of us, retail investor, the retail army, were to go all in on DPSD, that's not going to do anything to the price at all. Unlike what it would do for stocks like Tesla or some of the companies that are, going on a short squeeze, where a lot of retail traders plow money into that stock and it just goes parabolic because of all that demand. Leverage ETFs don't have that phenomenon. Why? Because they're actually not built on any kind of supply demand. They're built as derivative products where, when you're investing in these companies, they're essentially going to a fund. That's it. Like they're rebalancing. The price itself is derived, right, from the underlying index. So the demand supply factors actually apply to the underlying index. And technical analysis at its very core is really identifying demand and supply levels, right? That's support and resistance, because that's where a lot of traders, a lot of investors are trading those prices. That's literally it. So yes, so the nuanced answer is no, because there is nothing that you can analyze here. I mean, I wouldn't be able to tell you like 117 is a resistance. What I have to do is look at the underlying index and the ETF that it actually tracks, and then identify the resistance, and then try to correlate what that underlying index or ETF resistance is and what would be the price for the leveraged ETF if the underlying gets to that resistance. So that is the correct way to do this. But in most circumstances, you're going to see somewhat similar price action, of course, because it kind of tracks that on a daily basis. So DPSD, not really resistance, I don't want to call that, but a level to watch, of course, is going to be 117 all the way up to as much as 133, 134 is going to be for DPSD. But nice little uptrend of higher highs and higher lows. Yes, level 2 is definitely very, very useful for trading. Absolutely. I think you can get a nice little sense for where the order blocks are, where the large orders are sitting, at what prices. It kind of gives you a little bit of a depth of that market, which can certainly be very useful for day trading and just, investing long-term as well if you're trying to really pinpoint what prices you want to get in at. So yes, it can be useful, but you just need to know how to kind of read it very, very quickly. And it's mostly applied for trading intraday as opposed to like long-term investing or swing trading. Okay, so let's take a look at Rubrik. There was one more stock, Lululemon. We'll just take a look at that as well. So Lululemon here starting to rebound a little bit from that area of support around 160. We do have a little bit of a gap to fill in. I still think that $207, $208 is possible on Lululemon. That would still be the target. That would still be the resistance to watch. And like I said, a very strong support at 160, 165 here. I mean, this is incredibly oversold right now. And we do get these nice little, knee-jerk reactions from Lululemon after being very oversold. It starts to kind of rotate back up. But I would only put down that resistance up to 208 to 228. Those are going to be a couple levels to watch. Okay, coming over to a few other names here. Rubrik, FDS. So let's take a look at that as well. So we've got support level at $73, $72. Looks like we have done some analysis on this stock as well. Very, very oversold right now. Of course, on the R side, the MACD, it's coming up to that resistance around $79-80. If you do get a breakout above this, we're looking at that next target up to $98 to $99 for Rubrik. FDS and AMD. Let's just take a look at those very quickly before I come over to some more questions. Wow, what a insane drop here on FactSet research. It's been very much underperforming. I mean, it's been consolidating sideways. We've got a very strong support down here at around 290. So 290 would be a decent support to watch for FDS. And of course, a resistance all the way up to as much as 344, 345 for FDS as well. Advanced Micro Devices bouncing off of that area of support very, very nicely. So we are seeing a very nice rebound a little bit from that area of support around 148, 149. I think a big resistance right now is going to be staying put roughly around the 160, 161 level. And we are still within the context of this downtrend of lower highs and lower lows as well, right? So this is the entire downtrend with a very strong resistance up to 160 and a decent support at 148, 149. Okay, coming over here, depends on the underlying. Yep, so check the actual ticker and do a quick conversion. Yep, so we actually have a calculator for that as well, because one of the most important things that we don't know when we're calculating a leveraged ETF price versus the underlying is time. Time is the most important thing, which we don't know, because if I tell you, that Tesla is going to be higher 10% from here, we can quickly multiply that number by 3. That's 30% for TSLL, but that's on a one-day basis. What if I tell you that Tesla is going to get there in over 20 days? And we also don't know the path, how it's going to get there, right? Is it going to go up 5%, go down 2%, then go up another 3%? It's going to go down 1%, then go up another 7%. We don't know the path, and we don't know the time it's going to take to get there. And so those two unknown variables make it impossible for us to know what the leveraged ETF price is going to be, because it all daily rebalancing obviously affects that very much. So yes, I mean, you can do that conversion, but it's obviously not that simple, because the two unknown variables are indeed the time and the path that it's going to take to get there. On the minute chart, yes, a flood of orders could move the price for a very short period. Yes, I mean, on a shorter time frame, it could, but leverage ETFs in general are constructed in a very, very different way. They derive their values purely based off of options pricing, and then of course futures as well. So similar to the price of the option, right? I mean, you're just essentially basing it off of what the underlying stock is moving at, and that changes the options price. Same with derivatives such as leveraged ETFs, because they're deriving their value from the underlying. Okay, Lulu's giving us a nice swing. Yep, so that is looking pretty promising right now. Looking at Trade Desk, I'll go over that in just a minute. IWM, small caps, just hit a new all-time high. They've been doing pretty well. Oklo has been on fire. It just can't jump in when it's that high for now. I saw a very interesting reel yesterday on Instagram where this guy was like talking about how, we are essentially, humans are type 0 entities. And there are 7 different types of entities in the universe. We are type 0, where we're essentially just focusing on fossil fuels, and we're just very, very basic, very amateur energy acquirers. But if you come over to type 1, type 2, type 3, type superhuman beings or super beings or whatever that entity is, they can actually extract energy from the sun, from the universe, from other stars at a whole different scale, and then obviously be able to use that to, of course, accelerate whatever progress we're gonna make, right? Obviously colonize other planets. And that was a very, very mind-bending, mind-boggling sort of reel. But then at the end of it is also coming down to some other stocks like Oklo and CCJ that are doing work in these kind of environments and of course industries, right? So Sam Altman obviously is backing Oklo here. No profits, no losses. It's a very, very speculative play, purely based on this idea of what this industry is going to be. But then CCJ is another company that is actually working on this, and they've both been rallying aggressively, right? I mean, this company was like down as low as $35 back in April. It's up 143%. Not to mention, of course, we've got a few other companies as well. Just give me 1 second. I think we have the cleaning lady here. Hopefully they're not going to be entering my room. Just give me 1 second. I'll be right back. And again, I'm just going to put on Okay, I'm back. Again, just wanted to make sure that the noise of the vacuum is not going to be interrupting our live stream because, like I said, we do have the cleaning lady here helping us. So, where did he go? Yes, no, I'm back. Anyway, so coming back to the questions. Yeah, it's always fun. Always different situations, whether I'm recording in the bathroom of an airplane, whether there's sounds in the background. It's always something. The ambulance, or of course the NYPD in Manhattan, or the vacuum from the cleaning lady. Anyway, so okay, Vertex Pharmaceutical. We'll take a look at Vertex. We'll take a look at LDI, and then Roblox very quickly for all of you. So let's take a look at LDI. Okay, Loan Depot. Man, see, like there's so many stocks that have just gone parabolic here. I mean, it's like just one of those easy money environments where so many of these companies are just parabolically going up like 100, 140%. And that usually tells you a little bit of something about the market where you need to be a bit more careful, more cautious, given this easy money environment, right? So, as long as you understand proper risk management, you have your stop losses in place because, look, it's very, very exciting to actually see these opportunities and, of course, make money from them. But having that awareness is what makes all the difference, right? It's like one of those things where you want to quit when you're at the top, right? You want to quit when you're winning. And you don't want to keep pushing your luck. You want to keep pushing your luck because at the end of the day, a lot of these stocks are going up 100, 200, 300% are happening due to short squeezes. They're happening obviously because there's a lot of hype, a lot of, excitement around those companies and these stocks. And so you want to be making sure that you have proper risk management and stop losses in place to maximize those and then be out, right? So get in, grab the bag and get out is one of the best ways to actually trade on that momentum and not overstay your welcome, because the moment you overstay your welcome, things can turn bad. Things can turn sour. So this right here is, of course, the overbought stock here. Be very, very careful, obviously, with this. And I would put down a support that's going to be sitting right about here at 373, 370. Of course, we got a overbought and overextended RSI and the MACD as well. So that's where we are. Yeah, David, if you're new to investing, please know the markets are not always this generous. Risk is very high right now. I'm personally not investing into anything heavily. I agree. I think if you are, just getting started and, this was kind of like very similar to what 2020 felt like, 2021, where a lot of quantitative easing, markets are just going crazy with a lot of stocks pushing up 100, 200, 300%. And then, of course, we know what happened in 2022, an entire year of bear market actually left a lot of people with this sour taste about investing, and they kind of exited altogether. They never came back because, I got so many messages in 2022. You have no idea. People saying, "Hey, it's not for me. I figured out investing is just not for me, and I don't want to invest my money anymore because every time I invest, it keeps going down." And yeah, I'm just gonna be. And at the end of the day, like the conclusion, if that's the conclusion that you don't want to invest ever, that's the last thing I want for anyone. Is to not invest at all, because investing is the only way you're able to grow your wealth. Sour taste equal traumatized. I know 2022 was pretty brutal. Okay. So LDI we covered, SMCI, RBS, and Vertex Pharmaceutical. Let's just quickly cover those. Vertex is part of our shopping list. It is a phenomenal company, I feel, in biotech for cystic fibrosis. It's one of those companies that kind of saved me in 2022. Given that we were talking about that year and how brutal the markets were. It's come down to a very strong support around 367, 368. It has been consolidating sideways because, again, it is a company that's doing a lot of FDA trials. It's going to be volatile, but it's a company actually based out of Boston. In Massachusetts, where I'm at. Their headquarters are in Boston. 1989 is when they were started. And so consistently growing revenues, obviously struggling with a little bit of their profitability because they did do a couple acquisitions as well. And right now support level is going to stay put at 375, 376. ORBS, let's just quickly take a look at this company. And wow, okay, market cap right now is around 38 million. I'm going to skip over this. It's just not worth it. Anything under, I would say, like a couple 100 million. Our threshold used to be about $1 billion. but I've kind of agreed and accepted that, okay, there's also a lot of opportunities in stocks that are worth like 500 million or 400 million, but we at least have to keep it at least 100, 200 million. 38 million is just way too less of a market cap for a company for us to evaluate, because there's going to be a lot of, not to say it, but manipulation with these stocks, because it's only 30 million. any trader at a hedge fund can buy that company outright if he wanted to. So it's not that much, right? Okay, what do you think about leaps on 52-week low stocks, Srikanth? 52-week lows are kind of like this arbitrary number where I wouldn't base my analysis off of just the fact that they're hitting 52-week lows. But what if the stock was insanely overvalued and it dropped like 40% to hit a new 52-week low? It would still be overvalued, right? So valuation is what matters most, and you wanna obviously find companies that have a price which shows you a valuation that's lower than what the potential is for that stock. That's where the leaps come in, and we also have to run it through the leaps calculator to actually know if it makes sense to buy 100 shares or if it makes sense to buy a leap, because you want the cost of the leap to be closer to 60% or max 70% of the cost of 100 shares of the shares itself, because if it's anything over 85, 90%, I mean, you're just better off buying 100 shares of the stock instead of buying a leap, because you're not getting a lot of cost reduction. And yes, leaps do have a defined risk, which is significantly less than that of the shares itself. So there's that risk proponent to that as well. Moritz, favorite books on trading and investing. I mean, I've got quite a few. We do have, or at least we did have, a books channel on our Discord, but I have the MoneyVest Reads channel where I have broken down a lot of books. But yeah, Intelligent Investors, The Most Important Thing, Market Cycles by Howard Marks, Trading in the Zone. We got, the market, the little book that beats the market by Joel Greenblatt. I mean, there's just so many that I could recommend that are absolutely incredible. Psychology of Money by Morgan Housel. And yeah, I mean, the list goes on and on. There's just, so much that you can read on the markets, and it's always interesting, different perspectives. Okay, Roblox, and let's take a look at Roblox here. ORBS, we just went over. Roblox has been on a tear, absolute tear. And Temoff would agree. I think he mentioned in the Discord when someone asked him for a chart where his daughter took the laptop away for some Roblox thing, and I was like, are you sure she isn't looking at the Roblox stock, because it's been on an absolute insane rally from $49, 178%, getting up to 135, 136. Support level right now is going to stay at a 112 for Roblox. 112 is going to be that support. Okay, Lulu we already looked at, looking terrible, but starting to recover a little bit. And then thoughts on Bookmap as L2 alternative. I haven't looked at this. I'll definitely see if I can look into Bookmap a little bit and then share my thoughts. Okay, Intel. Intel is seeing a lot of momentum, of course, after the involvement of the U.S. government, as well as NVIDIA as well, investing over $5 billion. Intraday selling off, so a little bit of a red candle on a green day, obviously, yesterday. So we've got a huge gap to fill in with a support level that stays put in the mid-20s for Intel. So that would be a support to watch. IK, I agree, lost hard-earned money, but still here, because that's where I think I can have enough to relax for months, years, or my entire life. Property is constant maintenance. Yes. And there's always going to be this huge discussion between real estate and stocks, and I'm kind of curious to hear what all of you think. I think both have their pros and cons in the world of finance and investing. Obviously, all it comes down to is maximizing your capital. Right? There's no one strategy better than the other. It's just where you find most opportunity. There's pockets of real estate that can give you better returns than the stock market. And then obviously there's individual stocks like Palantir, NVIDIA, that no one in the world, no instrument, no financial opportunity can beat, as Palantir's gone up 20x in the last 3 years. And nothing would even come close to the gains of Palantir, NVIDIA, Tesla, like all these companies. But yes, I'm always interested in what everyone thinks about their own personal experience of whether real estate or stocks what would you choose if you had to choose one? If you had to choose one, what would you pick? I guess we do have more stock investors and traders than real estate, so I think the answer is going to be more equities, but you never know. We do have quite a few real estate investors in our community as well. Dave's got a massive portfolio of real estate. Okay, so Lulu we covered, Vertex we covered, AMPX. Let's take a look at that one. And then we'll come back to the market as we have a couple minutes until market opens. Okay, looks like a very nice bull flag breakout here. So nice little rally, consolidated sideways a little bit, and then another breakout for AMPX. Obviously, it's getting overbought at these levels now. So I think it's important to remain cautious and careful with the R side over 79, almost 80. And if you're looking for the next target, I think it's hitting a brand new all-time. Well, not yet. So we've got a resistance right now sitting at 1150 for AMPX. So that's the level that I would be watching as a potential resistance. In fact, we're already there. And that's where we have gotten rejected in the past. If we do get a breakout, then we're at all-time highs again, closer to 16 to as much as $20 for AMPX. Mike says, stocks, I hate fixing toilets. Can you do a poll? Leverage ETF. Real estate is by default for long-term investment. Yes, Oracle and the TikTok deal, that is been going on. Oracle's up a little bit over 1% right now at the moment. So coming over to the daily chart, getting up to 299. I mean, this stock has been on absolute fire. I mean, this has been, after the earnings and everything, it's just been going crazy, getting up to, market cap of almost $1 trillion. Oracle is set to hit $1 trillion valuation in 2025, driven by AI's impact on business and strong fiscal Q1 results, highlighting its dominance in data and cloud services as well. And yeah, the Xi and Trump call is happening today as well. So QQQs are up about flat, not much. We got S&P 500, that's flat, and QQQs are up over 37 basis points. You got Tesla up to 423. I got Nvidia up to 176, and then of course we'll keep close tabs on SoFi, BMNR, Oscar, all those stocks as well. SoFi 2820, very close to $30 right now, very close to 30, and BMNR is just trading over 60 right now. So here we go. Markets are open, and we are ready to go here. So here we go. Markets are open. We are open for business. The casino is indeed open. And let's see. Thoughts on PLRZ? It's a low float. Looks like it's going to be a low market cap as well. Yeah, Poly Ryzen Limited. Yeah, it's a very, very low market cap. Only 6 million. I think we can just ignore that. Just be careful with a lot of these micro cap stocks because there's going to be manipulation, and yes, they're like cheap to buy, but they're also like very risky. They're extremely risky. So let's take a look at our YouTube watch list as well. And if there's any stocks you want to add to this watch list that are trending upwards, that are seeing a lot of momentum, please let me know and I'll add it to the watch list here. But next up 5%, Oklo is up 2.8. We got Lyft up 2.8. We got CoreWeave, Open Door, all up over 2, almost 3%. We got Iron up 2%. Grab is at 1.5%. Roblox, Oscar. Then we got BMNR slightly down. We got MicroStrategy, DLO, Nebius, and SBET slightly lower on the day, with Tesla getting up to over 424, 425. And let's take a look at crypto. Bitcoin 116,000, with Ether just over 4,500 as well. RGTI, IONQ will add as well. Okay, computing and then IONQ. This has also been ripping quite a bit. IONQ just absolutely from 41 to 66. Just gone crazy. 68% in just a matter of like a couple weeks. Are we going to see SoFi 29 today? Is 29 on SoFi going to be a reality for all of us? I don't know why my trading view is lagging a little bit. ARKK took off. Yeah, because I think Cathie Wood really did turn things around a little bit by fixing part of the strategy. So getting up to $84, $85 now. Nice. But obviously it's still a long ways away from all-time highs. But yes, year to date up over 48% because now she's not trading as much. She's essentially buying a lot of Nvidias and Palantirs, and of course you've got BMNR. Like those are the kind of stocks that she's now into. But yeah, she did turn around a little bit of the strategy here. David, Mike, I've never had to fix toilets as a landlord. That's what plumbers are for. Yeah, I mean property management. As long as you can manage well, then we would never have to do that. So anyway, thank you so much for joining, you guys. I really appreciate it. I've got a couple more meetings today, but I'm going to send out some updates and alerts in the Discord, of course. Again, thank you so much for joining. Link's going to be down below if you're interested in joining us. Again, offer is open for Zoom calls if you are interested and learning about all the different offerings, what we can do for you as a community, as our platform is available. You can pretty much access any stock there, analyze it, and also educational material. All the courses are currently 50% off, so you can also enroll in any of these if you want to for 50% discount. Thanks again. Hope you all have a fantastic Friday and a great weekend, and we'll see you all Monday next week for the live stream. Take care.